location of financial instruments. Okay, we can specify the market into exchanges and over-the-counter market. Okay, any questions? Okay, so again, based upon the claim of priority, day market and stock market, or we call that equity market. That's based upon the priority of claim. Okay. Okay, and based upon the maturity date, money market, and capital market. And based upon whether the instrument is primarily issued. Okay, then we have primary market and secondary market. Okay, the last one. Okay, based upon the trade location, exchanges, and over-the-counter market. Okay. So, yeah, based upon the trade location, okay, whether the security is primarily issued, okay, based upon the date of maturity, and based upon the priority of claim, yeah, we can specify the markets into these 4 different types. Okay, the first one, okay, based upon the priority of claim, okay, day market, equity market. So what's the difference? What's the difference between debt and equity?
Debt is a loan.
Yeah, debt is a loan. Yeah.
Or bond.
Yeah, or bond. Yes.
And equity is stock, the ownership of the company.
Yeah.
So after the debt are fully paid, the lender doesn't have any power over the company, but the stockholders still have power control over the company.
Okay. Okay. So what Charlie says is that, okay, debt is a loan, okay, it is a bond, whereas the equity is stock, okay, and also if the firm is distributing, okay, all its assets or earnings, okay, so who has the priority order?
Debt.
Yeah, debt, okay. Yeah, when the firm distributes valuations, debt holders have a higher priority order than equity holders. Okay, the equity holders, what do they have? Equity holders.
Dividend.
Yeah, dividends. And
controlling.
Yeah, controlling, and also they have the right. Yeah. For example, if the firm would like to choose the shareholders, yeah. So the debt holders, they have the right. Okay. So let's see. Day firm, day market is where day instruments are issued and traded. Equity market is where equity instruments are issued and traded. Okay, and a day instrument consists of a written promise to pay a principal at a specified date and pay interest at a specified rate. Okay, so date, it has a principal of face value, and also during the investment period, okay, upon the maturity date, well, the debt instrument should pay the investor, yeah, yearly interest. And equity offers the dividends to the equity holders. Okay, and the instrument has no date of maturity. Okay, so actually, if I expect that the stock is going to rise, actually I can purchase and sell the same stock at the same day, right? Okay, so it has no date of maturity. Okay, so that's equity. So it is a plan for investors to share the firm's net worth, okay, and net income. That's that also we can share. We have the dividend, okay. And when a firm distributes valuations, they holders have a higher priority order than equity holders. Okay, so that's about the difference between debt and equity. So if you are an investor, which one would you like to invest? A bond or a stock?
It depends, because some bonds are risk-free, like treasury bills, they're risk-free.
Uh-huh.
Yeah, so if you are risk-averse person,
Uh-huh.
I think you can trade in debt.
Uh-huh.
Yeah, but if you are a risk lover,
Uh-huh.
you can go to stock,
Uh-huh.
because there it's easy for you to lose your money,
Uh-huh.
or you can also gain a lot of profit.
Oh.
Yeah,
Oh.
so if you do your calculated risk properly.
Oh, so what you are saying is that stocks, have a higher risk.
Risk.
Uh-huh. Okay. What do you think, Charlie?
Yeah, I think it's the same as Patrick. It depends on the risk that you expect. Like debt have much lower risk, and even lower is the debt to a bank, which have the lowest risk possible. But and the higher the risk, the higher the reward. So if you invest it in a very like volatile company, like beginning like a startup company, then the stock of that company are extremely risky but extremely rewarding if played right.
Oh, yeah. Yes. So stocks are more volatile. That's the risk you have to be faced with. Conversely, bonds are less risk. Yeah, they are less riskier. Okay, but to me, actually, I know bonds are safer. However, I'm investing in stocks.
Yes, but if you do your homework properly.
Uh-huh.
Let's say, for example, right now, nearly every investor is looking at artificial intelligence and how it is going to dominate the world in future.
Uh-huh.
You know, so companies that are actually investing in it anticipate that yes, there will be a lot of profit in future. So now, but people are now buying those stocks. Now, but how about if this thing doesn't come into reality? Or how about so many people invest in it and at the end of the day it bursts? So you can lose your money. You know, but if you are not greedy, you can invest in it for a certain time, maybe halfway, you sell your stocks and hold your money. But if you are greedy and want to hold up till the end, then you can lose your money with time. Because once people have information and say, oh, okay, this is good, you know, everybody is, you know, buying that stock. So later on, the funds given to such departments or investors will become redundant. What can they do with the money? You know, so the thing will start to lose value.
Isn't that what is why so important to diversify? Like people shouldn't put all their money in either stock or bond, but like divided 60-40. Because right now it's super likely that it's a bubble. Like the tech bubble is so big that it can burst any moment now. So even though bond might not have a very low rate right now because the market doesn't expect it to grow as fast in the far future, but they are also very stable. But the stock market is so volatile that it's very hard to predict right now.
Actually, I would like to point out something. You know the Robinhood app.
Yeah.
Have you watched the news about the Robinhood app?
Have you heard the GME stuff, right?
Yeah.
Yeah, that's what I told you about. Like the GME, the whole thing was based around rumor and people angry buying stock, and basically the sentiment affect the price so much. It's 10,000% price of that one stock, and not just GME, but also like entertainment and tech stock and Tesla and a lot of other kind. But their fundamental are very bad. They're like their statistic, their earning, everything are very terrible. But people just like the stock. That's why it's very risky to invest on retail stock right now.
Oh, the story starts from a GameStop. Yeah, and some people they grew up with the stock, the firm. However, nowadays it is no longer popular, and some firms or trading funds, yeah, they are shorting the stock of the GameStop. Yeah, and to the kids, okay, they grew up with this firm. Yeah, they are not very happy with that. And then one person, okay, just say that, well, let's just angrily buy the stocks of the GameStop. Yeah, that person just announced this through the Robinhood app. And then these young people, they just do as they can, just buy the stock. And so this is the first time actually these young people, these retailers, yeah, retail investors, they can fight against these bigger firms. Yeah, so
this happened before, but never on this scale. The retail affecting the stock price.
Yes.
Had happened. But like last December, there was this company called Palantir. They are like internet security company, and their stock price here steady 20% rise month by month. It's the same reason why GameStop rise so fast. This sentimental investment.
Yeah. So yeah, a lot of people they are very surprised about what happened. Yeah, through what the people do through the Robinhood app. Yeah, because just like Charlie said, it is the first time the retail investors they can fight. Yeah, and they win. They fight and they win. Yeah, they just make the GameStop stock price rising instead of losing. Yeah, so yeah, that's one thing I would like to point out, because in the past, nobody thinks that the retail investors can fight against these bigger firms. But this is the first time actually these people, yeah, they can win. Yeah. Okay. Should we take a 10-minute break? Okay, and I'm going to go get the textbook to show Patrick.
Okay. And also maybe we can have this slide later.
Yeah.
I think this is on learning.
Oh, yeah.
That slides are learning. Do you have a USB and copy?
Yes, I have USB.
Yeah, copy.
Okay. Here's my USB.
No, I check my note.
Probably USB, then you guys put.
Patrick, it is here after you log in iLearning, and then you click into the classroom. Okay, begin class.
Well, because it is in Chinese.
Sorry.
No. That's
English version.
PowerPoint in English.
Where did I throw my?
Okay, next week.
No,
Just
I have.
remind me next week. I need to get down. Just put it here.
A minute.
Okay. I need to go meet a bro for a second.
Oh.
Here.
Okay.
So Patrick, can you understand me?
Yeah, actually, I understand this, but it's a long time.
Oh.
Yeah, I worked in the bank before.
Oh.
Yeah, and during my undergrads, I studied finance.
Oh.
Not as a major, but a minor.
Oh.
Yeah, but it's a long time. Yeah.
Oh, so after the work, you decide to study.
Yes. So I've been studying ever since 2017.
Oh, 2017.
Yeah.
Oh.
So I worked from the bank from 2013 to 2017.
So is it a commercial bank or?
Yeah, commercial bank. But because my country is a small open economy, we don't deal in capital markets. It's just money markets.
Oh.
Yeah, and the central bank controls nearly everything. So most of the time when people want to buy bonds, it's just debt bonds, like treasury bills or Islamic bonds. You know Islamic bonds? So yeah. Because my country is an Islamic country, but I'm a Christian. So because they don't like interest, yeah, so they prefer Islamic bonds. Yeah, they just need a markup, a profit, not interest. But actually, it's the same thing, because if you look at the mechanism of calculation and everything, it's the same. But what they don't want to hear is the word interest. Yes, they want you to say maybe markup or profit. Yes, so they don't believe that a $C today is more valuable than a $C tomorrow. Yeah. So this is why usually when there are crises, Islamic world is more stable. Yeah, because they don't involve in stocks, speculations. They just believe that everything is stable.
Yes, a lot of people they just they study. Yeah, they thought maybe the U.S. should be Islamic. They should follow the Islamic regulations. Yeah, because people say